Welcome. Today, we are going to break down the Hodos trading method. This is a complete framework, top to bottom, designed to bring real structure, clarity, and discipline to your trading. So if you've ever felt just kind of lost in all the market noise and wanted a clear, systematic path forward, you're in the right place.
So let's jump right in. You know the feeling, right? It's this constant flood of opportunities, charts, signals. They're hitting you all day, every day. But without a solid system to filter them, it's really just noise. So the big question is, how do you actually find your edge in all that chaos?
So here's how we're going to walk through this. Think of it like a journey. First up, we're building your trading foundation. Then we get into the real tactical stuff with executing the perfect trade. After that, and this is huge, we'll learn how to play aggressive defense to protect our capital. And finally, we'll cover how you can keep sharpening your edge for the long haul.
All right, part one, your trading foundation. Before we even think about looking at a chart or an indicator, we have to start right here. This is all about defining who you are as a trader. And honestly, this might be the most critical step of the entire process. Okay, so here's the very first rule, and it's a big one. The Hodos ecosystem gives you signals from 8 different internal traders, and every single one has their own unique style. Your job is not to chase every signal. Your job is to filter. The golden rule here says it all. If a setup doesn't immediately click with your personal system and identity, you just skip it. The goal isn't 20 mediocre trades, it's 2 to 4 clean, high-quality trades that feel totally intuitive to you.
And this quote, man, it just perfectly captures the mindset of this entire framework. It's all about consistency. Success in trading isn't about hitting one spectacular home run. It's about following your rules with relentless discipline day in and day out.
So, now that we have that foundation set, let's move on to part 2, executing the perfect trade. Once you've filtered down to a setup that is a perfect match for your style, how do you actually execute it with precision?
Think of this slide as your pre-flight checklist. It is absolutely non-negotiable. Before you ever hit that buy or sell button, your entire plan needs to be crystal clear. You have to know your exact entry point, where your protective stop loss is going to be, and what your take profit targets are. And crucially, you also have to define the invalidation point. That's the price where you know the trade idea is just flat out wrong. And you have to understand the fundamental logic behind the setup to begin with. No ambiguity, no what-ifs, just a plan. You know, position sizing is a really personal thing. And here's the simple test. If your trade size is making you stressed or anxious, it is, by definition, too big. Your size should keep you calm and rational, aligned with your own system, not copied from somebody else, or even worse, jacked up to try and recover recent losses. Just think of strict risk management as the insurance policy on your trading account. We're talking about risking only 1 to 2% per trade, and always using a hard stop loss. And here's a critical rule from the method: never martingale or average down. That means never adding more money to a losing trade, hoping it turns around. It's a recipe for disaster. Remember, survival always comes before growth, because you can't grow an account that's hit zero. Okay, on to part 3, playing aggressive defense. Now in trading, defense is not a passive thing. It's an aggressive strategy you use to protect not just your capital, but your mindset too. This is such a simple rule, but it is so powerful. The second a trade moves 5% in your favor, you immediately slide that stop loss up to your entry point. Instantly, you've locked in your capital. You've turned a winning trade into a can't-lose situation. It just takes all the emotional pressure off and lets you let that potential winner run totally stress-free. And let's be absolutely clear about this. This isn't just a friendly suggestion. Within this entire framework, protecting your capital is a non-negotiable law. It is the foundation that all potential growth is built on top of. The method also sets a hard ceiling on how much you are allowed to lose from your peak account value, 20%. This is a hard stop. If you hit that limit, it's a massive signal that something is fundamentally off with your execution. And there's a very cold, hard mathematical reason for this rule, which we're going to see on the very next slide. And here it is. This is the brutal math of recovery. As you can see on this chart, a 20% loss requires a 25% gain just to get back to where you started. But look at what happens if you let that loss get to 40%. All of a sudden, you need a massive 66% gain just to recover. The deeper the hole you dig, the exponentially harder it is to climb out. That 20% max drawdown rule is specifically designed to keep you from ever falling into that deep hole in the first place. Look, the market is neutral. It doesn't care about you one bit. Your biggest enemy is usually your own emotional response.
So this framework gives you circuit breakers. 2 losses in a row, and you walk away for the day. Period. Just had a big win? Step back. Avoid the temptation to give it all right back on some low-quality impulse trade. Cold, logical execution is what creates longevity in this game.
Okay, so you have your foundation, your execution plan, and your defensive rules are all in place. But how do you make sure you're always getting better? That brings us to part 4, sharpening your edge.
There's this old saying that applies perfectly to trading. You can't improve what you don't measure. A trading journal is your ultimate tool for self-analysis. By logging not just the setup and the outcome, but also, as you see here, your emotions, you can start to see these critical patterns. Which setups are working best for you? Which of the Hodo trader styles really aligns with your wins? The data will tell you the truth.
The Hodos Hub also provides a whole suite of tech tools, and, well, ignoring them is like choosing to fight with one hand tied behind your back. You should be using the dashboards and market scanners to find the setups that fit your criteria, using advanced indicators to analyze them, and setting alerts to really perfect your timing. Technology is here to cut through the noise and strengthen your edge.
So we've covered the foundation, the execution, the defense, and the improvement. Let's pull it all together in a final summary. What is the core philosophy you should really take away from the Hodos method?
It really all comes down to this. The Hodos method is a complete system. It forces you to filter opportunities, to prioritize protecting your capital above everything else, and to combine a structured plan with psychological discipline. The goal isn't to hit jackpots. The goal is consistency. It's a clear path designed to turn that raw stream of signals into consistent long-term performance.
And that's our breakdown of the Hodos trading method. It's a framework that was developed by their own team of 8 internal traders, and it was built from the ground up to create a clear, repeatable process for turning market signals into real performance. So as you think about everything we've covered here, from filtering your trades to the math of recovery and controlling your emotions, ask yourself the question on this slide. Which single rule, if you implemented it tomorrow with perfect discipline, would have the biggest, most immediate impact on your trading? It's a really powerful question to think about. Thanks so much for joining me for this explainer.